Thursday was a day in which the market reconsidered that initial move to sell U.S. dollars post-Fed decision, and a day in which a recent deterioration in risk sentiment intensified. Mixed into all of this was a Bank of England policy decision that also had traders reconsidering the initial reaction, with the pound racing up to extend a multi-session run before stalling out above 142 and reversing sharply. While the BOE decision was anything but downbeat, the fact that there were no real changes to the guidance looking out was enough to inspire a round of profit-taking. The post-BOE jolt seemed to come from the discovery of two dissents, both hawkish ones, but the fact that these dissents came from notable hawks was a mitigating factor as far as sterling bullishness went. In short, back in September of 2017, it was very clear the BOE was signaling a November hike. Today, however, it was much less clear there would be any guarantee of a hike in May. So while that door is open, it just wasn't open as wide as what many were expecting. As far as the two dissents go, both came from those noted hawks, so on net, not the result many were looking for. Looking at the state of sentiment and this drop in stocks, there has already been an expectation from this desk's point of view that the onset of policy normalization would trigger a sizable pullback, which we talked of being somewhere in the area of 25% off the record high from January. We also believe this to be a conservative estimate, but fundamentally, the catalyst for this move, if not entirely policy normalization, is also coming from worry around U.S. protectionism and trade wars, with the latest news of U.S. sanctions on China resulting in this intensified slide. The yen has unsurprisingly benefited from this flow on traditional correlations, while the Australian dollar has been hit hardest in the developed currencies group given Australia's close ties to China. As far as the dollar goes, we see risk for a bigger dollar run ahead, but would look for confirmation on a euro-dollar break below key support at 21.55. Looking ahead, most of the calendar standouts on Friday come out of North America, with Canada retail sales and CPI accompanied by U.S. durable goods, new home sales, and some Fed speak. That's all for now.